Now, the BRVM Composite index was up about 0.9% to 220 points on Monday, and the leading sectors were textile, telecoms, and the petroleum sector. To review the activity on the BRVM today, I'm joined by Nelly Fofana, an analyst at Hudson and Co. She joins us on the line from Abidjan. Thank you so much, Nelly, for joining us today. And if you can just review the markets for us today. Clearly, the market has done pretty well this year. Market capitalization is up well over 50%. So your thoughts on where the market is now?
Okay, so the market continues to follow its upward trend after having reached 4,000 billion CFA on December 23rd to 12. The market cap is now 5,344 billion CFA, which is an increase of 32.6% over 5 months. This good performance reflects the attractiveness of the BRVM market for regional and international investors because of the growth potential of listed companies and the high level of profitability expected.
Right, like you mentioned, it's actually over 30%, not 50% like I mentioned earlier. But let's move on to Onatel. Some activity there with shareholders approving a stock split. Can you talk us through that?
Yes, exactly. The company is likely to split its share value from 1 to 10, and the split operation will be discussed with shareholders on the general meeting, and the share split should take place on November 29th, 2013.
All right. And if we move on to the bond market, some interesting activity there because the Côte d'Ivoire government is looking to issue a bond, a 3-year bond indeed. I understand it's 95 billion CFA francs at 6%. So interesting activity there. And can you just talk us through what they will be using these bonds to do?
Sure. Actually, the 3-year bond is worth 93 billion, and the interest rate is 6%, and the fundraise will be used to finance the planned investment in the state budget and also repay the domestic debt arrears. All
right. Well, what do you think will be the appetite for this bond, though, when it does come to the market?
Yes, actually, we can see a great interest for the bond market because investors look for high yields as opposed to the relatively low rates paid by developed countries. Yields on European emissions are lower, often less than 2%. And secondly, the success of these emissions is also a recognition of the potential performance of African countries due to the abundance of natural resources, improved macroeconomic policies, and good development prospects.
All right.
In addition, according to financial institutions such as the IMF, the credit risk is better, and transparency, the management of public funds, has greatly improved.